Hello and welcome to Wall Street Wire News, where you get today's market in minutes. Hi, I'm Dave Okenquist, and joining me is a special contributor to Wall Street Wire News, former Wall Street bond trader, Mr. Rodney Johnson, and Charles Sizemore, editor of the Sizemore Income Letter. Fellas, last week we talked about stocks falling. This is really for the second week in a row as bond yields rose, but we did see a pop this week. Stocks hit record highs. Rodney, I'm going to throw this over to you first. Was this all stimulus?
Well, it was a couple of things. It wasn't all stimulus. It was some stimulus because people see the money finally flowing, but they expected that. That's been locked in for a long time. It was yields coming back down a bit. Instead of yields popping higher, yields actually walked a little bit lower, took some of the fear out of what was going on in the market. And so that's what allowed stocks to walk higher and then reach those record highs again later in the week.
Charles, one thing economic-wise, I saw jobless claims rose less than expected. So could there be some optimism maybe that the economy is getting back on its foot?
Well, so that Goldilocks scenario there that, really this whole rally was based on, the rally going back, a year, was that the Fed would stimulate like crazy and inflation would be relatively tame and the economy would be, limping, but basically limping the right direction, right? And so what we've seen over the last, couple of days here is sort of a reaffirmation of those conditions. The Fed's still going full bore. There is some dissension within the ranks as to how much longer they want to do that, but they are still for now kind of going full bore. And those inflation expectations have come down a little, and we're just kind of back to where we were. We had our little scare, we had our little blip in the market, and it seems to be over for now.
But Rodney, to Charles' point, a couple of things in there, Charles, and you're on point in that we did get some consumer prices this week, and while headline inflation was up 1.7 over last year, we had core inflation up 1.3. It actually dropped a tenth. It was up a tenth for the month, but down a tenth over last year through a base effect. But the point is that people looked and said, well, maybe we're not getting all this inflation. And at the same time, people are writing stories about some of the things that might keep inflation from rising, be it attracting more workers back so that you don't have wage inflation, things like that. I'm not a fan of that. I think they're wrong. I think we're going to see inflation, but it was people tamping down those expectations in the market this week. And the other thing is there was some sanity brought back into the bond market where I think long rates will go higher, but they don't run to the moon, because we think of what's happening in the United States where, hey, the Fed is going to, I think, stay on the short end because that's what affects US Treasuries and this and that. But long bonds attract buyers from all around the world. And we have to remember, we are the high yield offering of the developed world. I mean, you don't get
clarification on that, Rodney. We're the only yield offering in the developed world. The rest are either negative or at zero.
Right. And so Italy is like 0.5% for a 10-year bond. And that's Italy, right? They're like a financial basket case. I believe the Germans are still negative at 30 basis points, and the Japanese have a pledge to keep their 10-year from, I think, 0 to 0.1%. And so, essentially zero. And so we're the only one, to Charles's point, offering yield on a 10-year. And so as our longer bonds walk up in yield, we do attract buyers from around the world, which then of course keeps the yields from walking too high. I still see a steepening yield curve, but it's not like the long bond is going from 2% to 6%. That's not going to happen.
It's also the rate of the increase starts to level off. It doesn't just blast higher like it has been over the last 6 months.
Right. But it has increased. I mean, you look at the 10-year, it dropped down to 0.38 at one point last year. It's about 1.57 today. I mean, it's a jump, and you have to adjust to it. And that's what we did.
CNBC's Ron Insana had a piece saying Biden's attempt to reverse wealth inequality will lead to a broader bull market in Wall Street. And his essential argument was giving cash to poorer Americans, and maybe coupled with something like an infrastructure bill, will actually give that boost to the broad economy, and then in turn keep the market afloat. Any thoughts on that, Charles?
So sort of, yeah. Financial journalists try to make things really simple and put a clean bow on it, but it's not really that simple. So if we make big infrastructure investments today, what does that do? It does create some jobs, and that's good. that's a short-term effect, that job creation. What it does is, 10 years from now, we'll be benefiting with higher productivity. All of the infrastructure investments we make today, that's going to show up in growth 10 years from now, or not necessarily growth, but just inflation adjusted growth in productivity. So there are going to be dividends from that, but it's not like it's going to happen next week. This is something that you don't notice for years. For example, in the 90s, we overinvested in internet infrastructure. It was ridiculous. There were cables that were dark for years because there was not enough demand for bandwidth. Well, we ended up mopping that up, of course. Eventually, we grew into that. And because we had that infrastructure in place, that enabled the streaming revolution, 15 years later.
Yeah.
So, clearly, there are benefits to all this. It's just not going to show up in GDP next week, though. That's absurd to even suggest that. As for whether it will fix income inequality, probably not. I don't. Okay, in this very, very abstract sense that having better infrastructure for public use just kind of increases opportunities for everyone. Okay, yeah, sure. Put a number on that. I mean, come on, you can't really quantify that. That's not really possible. So very long-winded way of saying, yeah, sure, the policies will help. It's a mistake to try to put a number on that, though.
Rodney, what are your thoughts on that? And in terms of maybe people getting another round of stimulus checks, we've seen something that we've reported on, a record level of household wealth. Should Americans be going out and spending that money? And then you could see maybe that. What about that infrastructure bill? Could we see maybe Charles is not so bullish on this idea, but what do you think?
Well, I think, Charles, it wasn't not bullish. It was, hey, you're going to see the benefit over a useful life, not over the next 12 months.
Yeah.
But I didn't see the Ron and Santa piece. I would assume what he's talking about are the very immediate spending pieces of the stimulus plan, and the $300 bonus check that's going to continue March through September, where it was set to sunset. It does help people because it pays 50% of the people who are on unemployment at least as much, if not more, than they made at their job. And so there's something to that, right? Because you can keep spending. And if you want money to flow into the economy, give it to the poorest person in your economy, because you have the greatest chance of that person spending all of it, or at least, the bulk. And so there's something to that. The bigger piece in here, I believe, is the increase in the completely refundable tax credit to people with children. And so this is a big thing, and it deserves attention, because we moved the bar from a couple $1,000s, whatever it was, to $3,000 for kids 6 to 17 and $3,600 for kids under that. And the government is paying half of it up front, and then the other half monthly, July through December of this year, to match up the money with how people live their lives, which is monthly expenses. And so that money is estimated to be enough to move half of the children who live in poverty in the United States out of poverty. And so there's something to that. The big thing about that is it's only 1 year. It's just 2021. And so my big thing with this is, look, you're giving a benefit here that the world is going to look at and say, well, it didn't hurt me. And gee, it helped these people over here a pretty good bit. We should make that permanent. And that is going to be the conversation later this year, is making that totally refundable tax credit permanent, clearly for the foreseeable future. And there's something to it. I'm not saying it's right or wrong here. I'm telling you that this is what I think is going to happen. And giving away free money does help. It just does.
Is the pop in the stock market temporary? Or, I mean, there was some accusations from hedge fund managers that people are getting their stimulus checks and putting it right into the market. I don't know that that's very much widespread. Could this lead to a sustained run at all? Or are these two completely unconnected things, Charles?
Well, so, okay. The people that are struggling, they need the money and they're spending it. Or even if they don't really need it, they're still spending it. But when you get to kind of that median American, that person kind of right in the middle, they, unless they've recently lost their job or unless they were really affected by COVID, they don't really need the money. They were already making their ends meet. Their financial situation really hasn't changed. So you've just given them new money. Well, I mean, if you're prudent, what do? You save it. You save it for the future. Well, where do you save money? You save it in the stock market. The bank doesn't pay any interest. So there is clearly a lot of money in being transferred into the stock market by this. Where is it coming from? It's not like every American is instantly dumping every penny into the stock market, of course, but I would say kind of that median American and above, they don't really need the cash. So they're doing what responsible people do. They're saving it, but by doing that, they're inflating the bubble more. So that's that's basically it in a nutshell.
Well, so there's something in there, Charles. First of all, household wealth reached a record last year, $230 trillion, I believe. And it was driven by equity in the stock market as well as home prices, because 64% of Americans own their home. But if you look at what people did with the cash, the savings rate in the United States jumped to 20% near the end of the year as people got the latest stimulus check. It is skewed to the top end, as you might imagine, because guess what? If you didn't need the money and you were doing okay, if you were putting a little bit of money into savings before all this happened, if you got extra money, it just goes more into savings, right? Something really interesting happened recently. In 2020, Americans paid down more than $80 billion of credit card debt. It's only the second time since 1986, when records started, that we actually paid down credit card debt. The first time was 2009 at the depths of the financial crisis, when we paid down a mere 900 million. 900 million versus 82.9 billion, if I remember correctly. And so we had been adding 54 billion a year to our credit card debt for the last 10 years. And then we turned on a dime and paid it down. That does a couple of things. It puts households in a much better financial position because it takes debt off of their ledger. It means that they're not having to pay those high interest rates, which I've never understood why we continue to allow credit card companies to charge 13, 15%, even when people have great credit.
Yeah.
And it gives them that bank of potential spending. In addition to the money saved, they can go re-up their credit card balance by spending more in the months and years ahead.
They can just reload the credit card, or they can do something like upgrade their house or whatever. Yeah.
And so I know you don't forget this, because we do talk, in other venues about all this. A lot of the stock market in the short term, or all of it, is psychology, and it's what people think is likely. And so as we see the economy doing pretty darn well today before the newest stimulus hits anything, because none of the money's gone out, and then we say, well, my goodness, the economy's doing well. We have more money going out the door. People have paid down credit cards. The vaccinations are going through. Economic sanctions are lifting. This thing looks like it's going to just soar. And so you add all those things together and you get a brew that tells you that the market should be higher.
Absolutely. I want to shift to commodities a bit, because we've seen this continuing surge in commodities and what people have been calling the grand super cycle. I'm thinking specifically of oil, copper, and Rodney. There's another thing out there that I don't know if people are paying attention to, is that now that the trade war is over, now that Donald Trump is out of office, Biden has basically stepped that down a bit. Now China's been snapping up American agriculture. So this is another thing, and we'll see a rise in prices there as well, right?
Yeah, and so, but it's not Biden. Trump did this. Trump beat on the Chinese during the trade war, and one of his concessions in the first agreement that they made, which was 8 million years ago last February, was that they agreed to buy more American agricultural products over the next 3 or 4 years. And so Trump made that deal happen, and the Chinese stepped into it, and they did two things. One, did they refocus some of their commodity purchasing from other areas? Yeah, they probably did. But two, their economy took off last summer into the fall as they were ahead of the virus and did some other things. And they had to cull their pork population, their pig population, because of some disease that they had in the year before. And so they are busy trying to rebuild that the best they can, which requires a lot of feed. And so they have reason to be buying a lot more commodities in the first place. And they made an agreement with the US to buy ours. And it came together to make kind of the perfect market, not a storm, but a market, because the Chinese are now the largest buyer of US agriculture. And our farmers are just going gangbusters right now because of it.
Charles, this is sort of with rising prices, and we talked about this with wages, and we're seeing this commodity surge is sort of a good news for some people, bad news for others, right? I mean, we can expect to see potentially higher food prices, maybe more spending more at the pump. But for the producers, this is certainly good news.
Well, there's a couple things to remember. So one, commodity prices don't affect consumer prices as much as they used to, because so much of our economy is services and information based, right? So yeah, I want to say commodities. What is it, like 9% of the economy now? I don't know. It's a small number, and so yes, if you do have sustained price hikes in commodities, you are going to see consumer prices rise. But I don't see it being that big of a problem. We had a big boom in commodities from roughly 2000 to about 2011ish, and consumer prices rose in that period, but it wasn't that bad. You know, inflation ran a little bit hot, but not that hot really. If anything, bond yields continued to compress in that time period, and inflation expectations were pretty muted. So I'm really bullish on commodities right now, in particular industrial commodities, because I do think not just our government, but the governments all around the world, the way they're going to look to boost economic growth more than anything else is with infrastructure spending. They didn't really do that so much after the 2008 meltdown. I see them, you know, the policies that they did after 2008 were not all that popular, honestly. And I think this time around, you know, the infrastructure projects are more popular. That's the thing that's going to get you votes. It's the thing that's you're going to see more immediate results from it. So I am very bullish on particularly industrial commodities more than ag. The way I view ag, you know, ag commodities are really subject to short-term booms and bust. That's not so much a super cycle. I'm more bullish on the industrials. I think that has more kind of more wind in the sails. That's something that has longer to run. Yeah, long story short, I do think that you will see this in prices, but not that badly. It's not going to blow up the budget. It's not going to blow up the typical household's budget.
Rodney, commodity futures trading is a dangerous game, but for the typical investor, what might be some more simpler plays to take advantage of this rise in commodities?
And it's hard to get to the softs, as Charles was talking about, you know, the wheat, the corn, the soybean. You can look at the farming pieces that are derivatives, John Deere, things like that. And they do well, you know, Mosaic does well. DBC, if you're looking for something that's an ETF that picks up some of these things and plays it. I'm more on the industrials, on the metal side with Charles. I think copper is going to be the thing, because not only do you see all this building out there that's I think is going to happen, but all of the electrical generation and different things, they require copper. It is the conduit metal that we all use. And so Freeport-McMoRan is a great place to be for something like that. And I happen to like Vulcan. I've recommended these things in other venues, and so I'm involved in these things. And so Vulcan Materials, they make the asphalt, the concrete, the aggregate, the things that we use building, you know, roads and bridges and streets. And so I would be looking there. And I would, if you're looking to be simple, there's a reason the Dow Industrials average is doing better than the other two indices this year, right? And so you could just be as easy as buying the Dow away from buying the NASDAQ or the S&P 500. And something that I've talked about for a long time that we're actually starting to see now, Tesla is starting to face competition, and pretty good competition. I mean, the Mustang, you know, EMOC is actually pulling orders away from Tesla. And we talk about it here in the US. My goodness, Volkswagen is wiping the floor with Tesla in Europe now. And so it's worth noting, because Tesla joined the S&P at the end of last year and is a large percentage of the S&P because its market cap is so big. And so you have to weigh this when you're looking at indices and say, hey, wait a second. I mean, the S&P is now, you know, Apple and Microsoft and Google and Amazon and Tesla. And so if you think that they're going to be facing some issues, then, you know, perhaps you fade that and look elsewhere.
Charles, any thoughts on any of Rodney's comments there before we move on?
Oh, no, I'd agree. The S&P 500 right now is extremely tech heavy. That's good when it's good. It's not good when it's not. And in particular, Tesla, that was a major addition to the index. It came in at I think this has to be unprecedented for a new stock to enter the S&P 500 and immediately take up that big of a percentage of it. I can't think of a historical precedent for that. It's a big deal. So yeah, I would say if you're going to pick an index right now, pick the Dow.
Excellent. I want to move on to a story here from Wall Street Wire News. We like to talk about IPOs here, and there was one this week that did very well. Roblox. Story here. Roblox rides pandemic-fueled gaming wave to impressive Wall Street debut. Starting here, much like anything else you can do at home, on the phone, while sitting on the couch, the gaming industry got an enormous boost in 2020, and this one was Roblox. They got their sales jumped 85% year over year. They're now valued after their IPO at about 45 billion. I believe that number keeps climbing every time I refresh the page. And for those unfamiliar with Roblox, it's essentially a platform. It's definitely for kids. But I looked at a couple of YouTube videos. I thought it was pretty interesting. They have you can pay developers to create their own world. So one, you could have like a racing game or a shooting game or something like that. And then the moneymaker is that players can purchase in-game currency with their parents' dollars. So that's where a lot of that money is coming from. Any thoughts on Roblox specifically, Rodney, or just the future of gaming potentially in the stock market, seeing the rise of this?
I think it's an interesting space, and it's got a long way to go. I mean, we're as we increase our ability to stream video at a better refresh rate, we just make the games better. We make all of this collaboration better. And the fun part about these games, and it's things I tell my kids who are in their 20s and they play these games, is that they get to collaborate with people who are distant. And so they can talk to friends, around the country, around the world, and get on a game and do that instead of, just going to the local bar with the guy who's close. And so I think it's great. It's great socialization. And the fact that Roblox allows for that individuality and allows you to build customized just gives you more control. And so I think they're probably going to take a bit of the thunder away from Electronic Arts and a couple of the other companies, because people are going to say, hey, wait a second, I would much rather have this thing where I get to tailor it to what I want versus, the old Destiny and other things that people can play.
Yeah, one of the potential downsides here in the article is the fact that it's a multi-platform game, so they end up paying developers to make the different versions of the games that we were talking about, say like a ski jump game or whatever it is may be. So I'd be curious to see the ones that get popular, if the developers start pulling rank and demanding more and more money. That would be interesting to see. But Charles, I'll throw it over to you. I agree with Rodney, and particularly, and I don't think this is going to change something we talked about, the sort of new normal, which is maybe people being in their homes a little bit more often. You change your habits. This is a way for kids to socialize with their friends. And I mean, gaming, I think, is going nowhere but up. What do you think?
Well, yeah. So my kids play Roblox, or my 8-year-old does, and they have a similar profit model to Epic Games' Fortnite. Fortnite really kind of pioneered this model of the game is free, and it's also collaborative. It's addictive because your friends are on it, and you want to talk smack with your friends while you blow them away, and there's that collaborative aspect. But then how does it make money? It makes money because, well, my character avatar is lame. I want to I want to make him a superhero or something, so I'm gonna buy this superhero skin, and now he looks like Captain America. Hey, that's cool. Well, that was $20 of my dad's money down the toilet. So but it's a great model. Like they make money hand over fist, and it's sort of death by 1,000 cuts if you're the parent, because the game is free to download. You're not having to dish out $60 or whatever to buy the game, but then it's $10 here, $10 there, 20 here, 20 there. I don't know how much I've spent on Fortnite and Roblox over the last, call it 5 years. I'm sure it's hundreds and hundreds and hundreds. It's probably in the thousands by now. And so good for them. They came up with a model that absolutely screws me over, but I mean, they good for them for thinking it up. One last thing on the video games. It's the last year, my family situations made no sense. We're basically gypsies in a wagon at this point. I wake up in the morning. I don't even know what country I'm in half the time. I have to get my bearings. Where am I? Right. But it's just through all that, I'll hear my kids screaming into their video game microphones in English to their friends and their cousins in Texas, and then 5 minutes later they're screaming in Spanish at their friends and cousins and whatnot in Peru, and I think I even heard them kind of speaking pidgin Portuguese with a friend in Brazil. And you're like, wow, that's pretty amazing that they can do that. It doesn't really matter where our little gypsy wagon goes next. My kids can still see their friends
in their community.
Yep, exactly.
That could always drain your wallet while using Roblox.
And then drain my wallet all along the way.
Right,
So
part of that
there
is
you go.
the counterfactual needs to be discussed, right? So if you were spending on Roblox because they're doing these things, it's not in a vacuum. It's instead of doing something else. And so over those years, what else would you have purchased for them to be entertained, play, enjoy, do whatever, if it wasn't
Well,
Roblox?
I feel like I've already spent money on whatever that would have been too.
Oh, so it is just additional for you. But I would argue that there are many toys and different things that we don't buy anymore for kids because they're spending their time on this. And so it's a shift in where the money goes. Is it more or less? I don't know. That's up to parents as to what they do.
Yeah.
I just think it's a change in what kids are doing.
Last thing here, final question on this topic. Will gaming always be a young man or a children's avenue? Is there potential to see this expand to say, I don't know, people over 50, 60, maybe getting into video games, maybe not like something like Call of Duty, certainly not Roblox, it's very kiddie. But is there potential expansion there, Rodney?
Absolutely. It's just time, right? And so I think I am the front edge of Gen X, born in the mid 60s. And so we were the ones that played Pong, we were the ones that were going to the arcade and playing, Galactica and all those things that you were playing, and, Space Invaders and Donkey Kong. And so we were at the front edge of that, the console game. And then, the video game, there was Duke Nukem and whatever when I was in college and, kind of the clunky first person things that were terrible. But our kids are the ones that really have kind of made this mainstream, and they're not giving up as they age. And so it's going to be collaborative with their children. And you already see that, parents that play games with their kids. And why would they give it up as they get older? It's the unknown, right? I can't say what game they will play because I don't think it's been made yet. I think what's going to happen is people who are very adept and comfortable with an online life and avatar are going to be searching for something. And believe me, there's a developer out there or a million developers out there that would love to build a game for a rising set of people whose children are now teens and don't want to talk to them, and they're making more money than they ever have. My kids are going to reach their 40s and 50s and have excess cash and time. And believe me, somebody is going to build. Is it a game? Is it an online life? Is it sim? I don't know what it is, but it's going to be something, because it would be odd for it to go away. It just wouldn't make sense.
Yeah, we'll see where virtual reality is in a few years. Charles, your thoughts on that?
I loved video games as a kid. I mean, I had, the Nintendo, the Sega, I had all that stuff until the day I turned 16 and got my total just piece of garbage car. And then what's a video game? I didn't care anymore. I had my car. I am a fossil, and that is not how it is now.
That's right.
Clearly things have changed. I agree with Rodney. I may hate it. I mean, I don't like this adaptation. I think it's, and I don't think it's good, but it doesn't matter what I think. This is happening, and people that grow up with these games like them. They continue to play them. I know I have friends that are my age or a little bit younger that never really quit gaming. They still play. They're successful professionals. These aren't. The stereotype of the gamer is some, sweaty fat guy on a couch, eating Cheetos and smearing it on the control. I mean, there's a stereotype, right? But it's not really true. I mean, I have friends that are lawyers and accountants and, high paid professionals that, they have a high stress job. They come home, they blow off a little steam playing video games. That's kind of how they relax. And then, they get on with their evening. So this trend is here to stay. It's not going away.
Yeah, I agree. It's only going to grow and grow and grow, and we will see more companies like Roblox hit the stock market and see soaring valuations. So something to definitely keep an eye on in this growing space. Well, that's all the time we have for today. I want to thank you all for watching. Gentlemen, I want to thank you for joining me. Rodney, we want people to head on over to wallstreetwirenews.com, and if they haven't already, to sign up for our free email newsletter. If they do that, what kind of financial news stories can they expect to get in their inbox?
Well, I think it's going to be the stimulus rolling out and what people expect in terms of buying. And it's going to be the difference among the states in terms of lifting economic sanctions and capacity restrictions and how that's affecting them. And I live in Texas, where the governor removed all of it. He did not say stop wearing a mask and do what you want. He said use your own judgment, and clearly you should be doing what's right for you, as businesses should as well. But then other states have kept it all on, and so I think as we get through next week and really the rest of March, that's going to be the big story as to who's doing better as we get through spring break, and you see people just having a great time and enjoying themselves, and in other states, stuck in their houses and not happy.
Charles, what do you have your eye on, and how can people find your work?
Yeah, I'm still watching the commodity boom. I think this is really the most exciting thing going on right now. This is what I have my eyes on, and I think this is the story, not just of the next week, but of the next couple of years. As for where to find me, just go to sizemorecapital.com.
Excellent. For Rodney and Charles, I am Dave. We hope you have a great trading day.